Get ready. It's Top That Trade. Joining us for some trading and shenanigans, Knuckman, the chief market strategist at St. Paul Research, and Phil Flynn, a Fox Business Network news contributor. Ready to go a few rounds, guys? Here we go with round number one. Spooky fear factor. The 2018 Volmageddon wiped out some VIX ETFs, including the T-VIX, which was delisted. 2 times the leveraged VIX ETFs are making a comeback. Are you afraid?
What I want to pay attention to is have a little concern anytime you're trading leverage ETFs or you're trading inverse ETFs because they have a limit. They can go down to 0. And that's what happened. But as far as the VIX goes right now, I like what I see. We actually had a lower VIX, even though the market made new relative swing lows in the S&P this week. And that's a very positive sign. So let's see if we can get another bounce, lower VIX, higher stocks.
I love volatility. And of course, stock traders don't know volatility. Trade natural gas. It hit a volatility of 99%. Could you go to 100%? I don't know. But getting back to the volatility index trades, I actually like these type of trades, but Alan's right. They can be very volatile, very risky. They're great when you win, not so good when you lose. But if you're looking for volatility, I think insurance, right? If you want to look at for insurance. So if you want something that may benefit from volatility, but be a relatively safe investment, look at insurance companies, something like Hartford Financial or Allstate, because as the market gets more crazy, those insurance companies should look a lot better.
Round number 2, $130 oil. JP Morgan analysts believe the market can handle $130 oil, but do you think it could cause a stock market spill?
Well, if you got up to $130 a barrel, we could survive it, but could we thrive? That is the question. But it's kind of interesting. Many years ago, I did a seminar, speaking tour that can the world survive $40 a barrel? In fact, I put out T-shirts, I survive $40 a barrel oil. Because at that time, my argument was everybody thought $40 a barrel would destroy the global economy. And I was saying, hey, wait a second. The reason why we're at $40 a barrel is because the economy is expanding, unlike anything we had seen in many, many years. So not only did we survive $40 a barrel oil, we thrived, and now we laugh that anybody could be afraid of $140 a barrel. But I'm a little bit more concerned about $130 a barrel because of the reasons we're getting there. We're not necessarily getting there because growth is expanding. We're getting there because supplies are tight, and we haven't invested enough to meet demand. So that can be a problem. If we get to $130 a barrel, that could shake up some companies that will really be adversely affected by shortages of supply.
First of all, Phil, you weren't clear. You were talking about whale oil back then, right? That's when we were pricing whale oil before.
I remember whale oil. That could have been.
So, and where this growth is going to come from is new supply is going to come from private producers, because there's, like Phil said, there's a bit of a restraint here in people investing money into new situations right now. But actually, oil and gas permits are in the fastest pace to reach the highest level since George W. Bush here recently in federal land. So that could also relieve some of the pressure.
Round number 3, sea change, and we do mean sea. Walmart, Target, and Home Depot are a few that are now chartering ships to get overseas products in time for Christmas. Which retail-related stock do you think will sail?
Here is they needed their own ships, and it costs $1 million or $2 million a month to charter these ships to get the product from China, and they have to have a commitment of a couple of years. Now, these guys are big enough they can do it, obviously. So we've got Target days coming up here, October 10th, just in case you're a Target fan. Target is 13% off its highs. Walmart's 10% off its highs, and actually unchanged year to date and in 1 year. So that's a risk reward. But the one I like is FedEx. FedEx is 30% off its highs in May, and it's down 15% of the year. So I like the risk reward in FedEx because they're a shipper as well.
I like Home Depot, but I'll tell you, this is a bigger issue that we're going to hear more about, the supply chain issues. These companies are very, very smart. And by them locking in these long-term contracts, they're telling you that these supply chain issues are not going to go away. My biggest concern is that I read that Tonka trucks might not be released in full in time for Christmas.
Here's your bonus round question for today, guys. For the first time in 65 years, the rights to the Bozo the Clown character have been sold. Who was the buyer? Amazon's Jeff Bezos, actor George Clooney, or actor David Arquette?
It was the biggest thing going back in the 60s at lunchtime. Every kid in the world watched Bozos. So I think it could be a very hot property. I'm going to go with Mr. Clooney.
So I'm going to go with Mr. Arquette.
Actor David Arquette is the owner. Great job. You won.
And a factoid is my wife was on that Bozo show as a child, and that is her claim to fame still to this day.
Oh, very cool. Me too. But our Bozo was in Grand Rapids, Michigan, so I think it was a different Bozo. But great job again. Business First AM continues right after this. Go to businessfirstam.com for where to see our show on TV.